The US markets have been pretty indecisive last week. A lot of red with a pinch of green. But it doesn't matter where the markets have already been to. What matters is where the market is heading towards. In this video, we'll go through each individual indices to see where the weekly draw on liquidity lies. We'll also go through all the news events that will drive this price action. Plus, I'll give you two stocks that are ready for explosion. Stay with me to the end of the video. Welcome to Squid Traders. Starting off with our favorite, Mr. President. Now, Mr. President decided to post this video out of him firing Mr. Powell. Now, what does that signify? Even after a 25 basis point rate cut, Powell can't keep his job. But jokes aside, this I feel is the signal that everyone was waiting for a confirmation that he is pushing for another rate cut. But what will really happen with another rate cut? Will it basically change anything? Let's look at it, right? Over the past 12 months, we have seen a total of 168 rate cuts by central banks worldwide. Yet, the US dollar still experienced its worst performance since the 1970s. Like, showing all these numbers and showing this picture does not change much, but what it shows you is that we are approaching a point where the rate cut numbers are peaking. All across the globe, we have seen the maximum of 249 rate cuts that was in 09. 196 in 2020, and now we are approaching 170 rate cuts shortly. I don't expect this number to go much higher, maybe closer to 190ish, but that would be the peak, and this will have a big impact on DXY. So let's look at the DXY and see where we exactly are. So DXY, for people who do not know, is basically the dollar index. Now the dollar index shows the strength of dollar against other currencies, and in this way we can see where dollar is headed, and if obviously the way dollar heads is the way the US economy goes. Now looking at dollar, we have basically broken out of this symmetrical triangle on the weekly time frame with a deviation on the upside. Now this deviation is when I realized that DXY is heading down. So once we broke below this fair value gap, it was quite clear we are heading down. Right now we are trading inside a very critical area. That is this order block on the weekly time frame with a lot of sell side liquidity across the board on 93 and below 90 areas. Is dollar going to head towards that? I believe so. With a lot of numbers that are coming out this week, I think it will start its second part of the downtrend. The only thing that basically puts dollar in a better place is the sweep of liquidity that happened over here. And every time, if you will look at the chart, dollar sweeps liquidity on the lower side, it starts heading towards the upside liquidity. But in this case, I believe the upside liquidity is at max this area across the board around 101. So I expect dollar to range for a bit in this area, maybe go higher, sweep the liquidity and then head lower. But in any case, the sell side liquidity down below across the board for 93.2 to around 90 is very crucial for dollar index, and I feel dollar index gonna head towards that. The driving part for dollar index will be the employment numbers. Throughout the week, starting Tuesday, from job openings to ISM manufacturing PMI and then the big one, non-farm payroll. Once these numbers are in, I believe dollar index will basically capture a very good image of where it wants to head towards. And we will also understand where the market wants to go towards in the coming month or so. Now let's not waste too much time and dive into Nasdaq on the weekly time frame. On the weekly time frame, the closure has basically given us a nice little fair value gap of 50 points. Now this 50 points, even though very short range, is going to be very crucial for the price action. Why? This is the imbalance that we wanted. When a weekly candle leaves a fair value gap, it is ought to be retested sooner rather than later. Now, if the price goes towards the weekly fair value gap and can show a good bounce on it on the medium time frame, that is the long position for you on the lower time frame. And the target for that will be around 25,200 area. So I'll be keeping my eye as a drawn liquidity for Nasdaq on the upside to be 25,200, on the downside to revisit this fair value gap at around 24,430 area. So keep an eye on this area. Basically sweep off the previous week low, start bouncing from there. Maybe Monday go towards the sweep, on Tuesday sweep it properly, on Wednesday, Thursday, Friday, that's when the bounce will really happen. So I'm looking towards it. I'm bullish overall on Nasdaq for the weekly outlook, but if this fair value gap breaks, I will be looking down towards these lows that have been created previously. So these equal lows, I would see them as a draw on liquidity if we cannot sustain the fair value gap on the lower time frames. So yeah, very clear Nasdaq. Looking at it on the daily chart, Like, this is where it gets really interesting. Now, Nasdaq has started off its secondary trend, that is the downtrend. With this range in play, if we are able to go down and let's say we are able to sweep the previous week low and we are going to basically invert the fair value gap, I could see Nasdaq dropping towards this daily order block right over here. This daily order block will support price very well. If this is broken, then I would say that the uptrend is over and we wait for the uptrend to restart before thinking long in our minds. So yeah, Nasdaq is looking bullish as of now. Let's see how we react to that weekly fair value gap, and we can take it from there and see what can be done in regards of our LTF trades. Daily is looking bullish, weekly is looking bullish. Moving on to S&P 500. ES has not left any fair value gaps on the weekly chart. This is the difference. Now this results in SMT, something that Nasdaq has done and ES has not. What can this result in? Because the SMT is happening on the top side, it can result in the price going lower in the coming weeks. Again, you have to be very clear. I am expecting price to go lower early in the week. But if there is a bounce out of that fair value gap, I will turn bullish. If the fair value gap is inverted and the price starts trading below previous week low, I will turn bearish towards the equal lows on Nasdaq, right? On the ES is the same story. If price is able to break the previous week low and invert this fair value gap right over here, I will turn bearish on ES. Where is the bearish sense coming from and where will it end? So for ES, I'm pretty clear that this order block is the one which I want to see retested. If this is retested on the weekly chart, that will be my draw on liquidity overall for ES. Will this happen? We'll have to see, obviously. What are the chances though? I think the chances of us going lower initially in the week are much higher than us going higher initially in the week. So Monday, Tuesday, as I said, I will be trying to be bearish. Wednesday, Thursday, Friday will depend on the reaction that we get from these fair value gaps and order blocks that have been placed on MTF and see where the market wants to head towards from there. Let's move on to gold. Now gold is in a cycle of its own. We have broken out of the rectangular consolidation and now we have achieved the target of this small rectangle on the weekly time frame. So the target has been achieved in this week. What matters now is to see whether the price action or the trend wants to accelerate further or it wants some sort of a reversal over here and try to go lower to create the secondary and then head higher. One thing is very important for gold and any gold holders will be this trend line that started off in 2023. Till the time we are staying above this trend line, you need to be bullish on gold. Once we have broken below it, that's when you can start turning bearish and basically think of selling your assets in regards of profit booking. Now let's look at the targets that can be achieved with gold. We have basically achieved the 200% target right now for this acceleration gap on the daily chart, but there's still the 400% extended target of 4013. Do I feel that will be achieved soon? I would say we need to see how we react. I mean, I don't like to say what the market is going to do and this is the bullish price action price target. What I want to see is once the market is leaving fair value gaps, like yesterday price action left a small tiny little fair value gap right over here. What happens when the market comes back inside of these gaps? Does the market react in a bullish way or does the market basically invert those gaps? If the market is going to invert these weekly gaps, then yes, I will start turning bearish and see where the market can head towards. And obviously on the lower side, the worst case scenario for me is this order block. If the market goes below this order block, I am going to turn bearish on gold on the weekly chart. Until this order block stands, I am bullish on gold overall. Now looking at daily, again, a very good reaction out of this fair value gap right over here. Look at how price went inside, dig and then pump. Now if market can sustain this move, I would say 4213, yes, is a possible target. Will we have some sort of correction before we go higher? I really doubt it. If there is acceleration overall, if the market starts trading above this 200% and uses this 200% area as a support area, I would say it's an easy long from here to around $4,200 and you can basically stick into a swing position and stay there for a while. Now moving on towards Bitcoin and see where Bitcoin is and how Bitcoin is trading. The weekly chart is looking bad, but I do not care. Why I do not care? Because there is a clear draw on liquidity right over here. The market is extending towards it, right? The rejection overall is looking bad, but once we sweep this liquidity, that's when my eyes will open. That's when I would want to see what really happens next. Now on Bitcoin, we have this very beautiful order block sitting right where the price is right now. Can we just go a bit lower? Can we just sweep this liquidity out, go towards the 103,000 area, 104,000 area, and show a bounce out of it? If that happens, it will be the perfect trades towards $155,000 target, because Bitcoin has accumulated very, very well in this range, right? We have gone down, but we have shown reaction out of it. We have basically not had any sort of massive liquidation, but we have had minor liquidations, but that has wiped out a lot of money from the market. A lot of late longs have been wiped out. What matters now is one more deviation to the downside and we can start heading towards the upside. So I'm looking towards Bitcoin and I'm thinking, give me that one little deviation on the downside. Give me a reaction out of that deviation on the 4-hourly chart with a bullish change of structure, and that is where I will trigger into a long position. Looking at Ethereum, Ethereum has digged inside this order block. I'm still waiting for this right shoulder creation. So as you can see on the weekly chart, we have the left shoulder, we have the head, and now I want the right shoulder to be created. A small deviation on Bitcoin could result in this right shoulder creation on Ethereum. Basically accumulation over here for the next 2 weeks or so, and then a liquidation event, and then the pump up. That is what my Ethereum analysis looks like. I'm still aiming for $8,000 per Ethereum for this cycle. Will that happen? A lot to see. Is it looking good? Yes, of course. The chart pattern is not complete. It's not complete, but it is creating that chart pattern. So I'm looking forward to how Ethereum reacts this week inside of this order block. Do we go down deep, or do we just go down a little bit with a wick down below and then just clean bounces out of it? So yeah, $8,000 price target for me for Ethereum. Will that be achieved? I'm quite sure in this cycle it should be achieved. The chart pattern is looking beautiful. So let's see what we get out of Ethereum in the coming week. Moving on to Solana, we are still inside this rectangular consolidation. The good thing about Solana though is that it's bouncing off the mid level of the rectangular consolidation. If we can do the same again, like just dip a little bit lower and then again another bounce and close the next week's candle as an indecisive candle, that will be at the end of this downtrend, you will have an indecisive candle. That will result in the trend getting weaker and the uptrend getting stronger. So I'm looking towards Solana and I'm thinking, hey, yes, I want similar price action to what I want on Ethereum, but I wanted to show a little bit more strength so that the liquidations are not so low. There is a clear support that we get on the mid level, and from there we can obviously create a trade, we can have a good stop loss, and we can trade it on the weekly time frame. Now, one thing that you may have noticed that I look at higher time frames. The reason I look at higher time frames is because they give you an idea of where the market wants to head towards. And when you take that higher time frame bias onto the lower time frames, it makes your life very, very easy. You have your targets, you know how to risk. Like if I'm bullish in the market on weekly, I would not be going full risk on the shorts. I will be going half risk on the shorts. So that makes it very clear for me how I want to trade the market. Now, as I promised, I'm going to give you two stocks that are already ready to explode, that are just waiting for another push in the market, and they will fly. Starting off with Centerpoint Energy Inc. Now, S&P energy sector is already primed for a pump up. If you will see the chart, you will see it's breaking out, it's looking wonderful. At the same time, this stock has created this cup and handle formation right at the top of a trend. And this cup and handle, the breakout point is 39.31. We are already trading at 38.81. So once this breakout is confirmed, I will be looking for a long. So somewhere from about 39 area or 40 area, close to 40 area. And the stop loss will be under these candles. So if this fair value gap is respected and the market starts pumping from here, I'll put a stop loss at $38 and I will get a target of around, let's see. So my target on this will be around $42 something. It's a very, very good trade. The markets are looking good. The pattern is complete. It's a matter of a breakout, a clean breakout above 39.31, closing above maybe 39.5 or $40, and you can enter from there. The second trade is MetLife Incorporated. A very, very beautiful inverse head and shoulder pattern has been formed. We are already trying to break out from the pattern, and for me the entry point will be 82.31. So an entry over here with the stops under these lows or under this low if you want to be on the safe side, and you will have a target on the upside for around, see, most of the charts that I do is in front of you guys, so bear with me. $91, 1.68, or if you take the lower of the stop losses, if you are basically being more conservative and you put your stops right under the body of this fair value gap, it's 2.49 hour. Beautiful trade, 11.8% move towards the upside. I will be taking this once the breakout is confirmed. That is it from me today. I will be seeing you pretty soon for live trading sessions in the London time zone. So that would be happening at around 6:45 a.m. London time. I'm looking forward to it. We'll be starting it pretty soon. So yeah, have fun, enjoy yourself, take care. Bye.